Raz,
Michael,
we're switching seats.
it's
Do
good, no?
Do you feel okay over there?
Do you feel okay
I'm
with
fine.
my
I'm fine.
seat?
I'm fine.
Yeah,
Yeah.
good.
I'm a little thrown off.
Yeah, because this is new for you,
It's,
right?
it's new. It's
Yeah.
new for me. I've watched it, and now you guys flipped around, so all that preparation is just out the window.
You're gonna be like, who am I talking to? Which guy?
Yeah. No prep.
Nice of you to jump in, Kevin.
Yeah, no worries. Appreciate
And,
it coming.
Thank you.
We've been wanting to do this. We kind of had to time it for when you're in town. So thanks for taking time out of your schedule to do it.
Yeah, absolutely.
That's very cool of you. Kevin Brockland, you can tell us how you got here because that's one of the questions, so I won't get into that.
Mm-hmm.
But you run a seed stage firm based out of KL,
Yeah.
Indelible Ventures. We like following you on LinkedIn because it spurs conversations in us that we've had with other people. Maybe we're on a trip right now where we're kind of saying B2B, Southeast Asia,
Yeah.
B2B.
tech, make it bigger,
Yeah.
stop this B2C madness. That's kind of our trope.
Even before we started the podcast, we
Yes.
had this conversation
We would
about
riff on
B2B.
this.
Yeah,
Yeah.
We're like the hipster crowd. We were doing it before it was cool.
Yeah, maybe we've come
Sometime. Or you fool.
Maybe.
we've come into our own now.
Yeah.
You started this in 2021. Correct me if I'm wrong.
Yeah.
But we're gonna get into some of this.
Sure.
A couple portfolio companies, just naming a few: Kinetics Pro, K-Link, Shoppable, to name a few.
Yeah.
People can go on the website and look. And actually, one of the questions is going to get to that, so I don't want to jump the gun there. So we'll start like we always do. Not so much why you in Singapore, because you're not, other than being here today. How'd you get to Asia?
Yeah.
And like, why have you stayed?
So it's a little bit of a long story, so I'll try and shorten
Sure.
it. So I had global roles in the past where I was covering basically most of the emerging markets across continents. Yeah, I left that to take a regional role because I wanted to be closer to companies. That was actually Latin America. So I changed focus on a region, sole person. That was my focus area. So I was living in Mexico. Shortly after taking that role, the person that was covering Asia went on maternity leave. Me being the new guy, I volunteer thinking it's going to be temporary, and then she just never came back to take over the role. So here I am, basically sole guy, covering two complete flip of the AM/PM regions for a year straight. And I'm basically going 2 weeks here, 2 weeks there, and country hopping for each of those 2 weeks. So after a year straight of doing that, it was a little bit exhausting. So I had to make the decision on where am I going to be, and I opted for the Asia markets, which for that fund was basically from Pakistan all the way through Indonesia, the emerging Asia. And the YKL out of it was more so in regards to like, none of our money came from Singapore. We were emerging only. So there wasn't any sort of like business activity. It would have just been for a comfort reason. So I asked for a number. They made an offer on it. And I said, I'll take that, but in KL. And so now I just ended
a
up
good
settling
arbitrage.
in and being quite comfortable there. And so I day trip here to Singapore from time to time.
Awesome.
Yeah.
That's good. And I think it makes sense from a arbitrage perspective, I'm sure. And
The low cost of living
Quality
is a
of life.
highlight, and
Yeah.
you know I lived in New York for some period of time, so I'm accustomed to an apartment the size of a shoebox. Over the time that I was there, I progressively ended up getting a little bit nicer, but the early days of like the rent control, tiny little bathroom and kitchen are basically the same room, sort of places. I ended up getting a little bit accustomed to the space when I was living in Mexico.
Yeah.
And the benefit of opting for KL was that amount of like
you can do the
space.
same thing, basically.
Yeah. We're not necessarily tripping over each other in the apartment, and now I have little ones, so that's even an additional advantage.
Nice. I'm thinking out loud, like raising a fund when you are in Malaysia.
Yeah.
How the LPs reacted? I'm just trying to think with you.
Yeah, so there's a few things that I did wrong, and I'll tell you those. One, the timing that I chose could not have been worse. Like, to be honest with you, like I come right after, right as the bubble is bursting, and no one wants to do anything. So like
2021, right?
2021 was when we did the first close on that fund. So like there's a little bit of legwork that goes in. So there's always a timeline ahead of that. But like you can't have physical meetings. And let's be honest, like Malaysia does not have LPs. Like it's not fundraising there.
You can't fly.
You can't fly. You can't go anywhere. So stuff was trying to be done on Zoom. So timing was quite bad. Was quite challenging. I think I over-indexed branding on the specific country. So like already being in Southeast Asia, when you're having to pitch mostly outside, it's already viewed as a little bit of a niche. Mm-hmm. Then I'm B2B, which is another niche. Mm-hmm. Then I kind of ended up over-indexing and being associated with a specific country within that region. So I'm like a niche within a niche within a niche. And so there was a number of challenging points in getting it off the ground. But as the saying goes, if everything was easy, then everybody would be doing it.
So what was your magic spell to make this happen?
I think the same as any entrepreneur, you just like by force of will have to put it into creation. Otherwise, I mean, there's a solid value proposition, to be honest with you, because it's one of these things to where there's an opportunity where not enough people are paying attention to it. There's elements of opportunity meets cost arbitrage as well. So there's a couple of benefits to knock on there. Mm-hmm. But in all honesty, as any entrepreneur that's gone through the process, your value proposition can be amazing. But if you don't have the force of will for execution, it doesn't really mean that much.
And you need the track record in order to show type of capabilities to execute, no?
That's a tough one because, and not a lot of people actually know this part of it, is that for me, and I've been in the investment industry basically since I came out of my MBA, mm-hmm. Moving from later stage to earlier and earlier. Mm-hmm. That track record is not portable. I'm not legally allowed to take that and start talking about that because it's very sensitive. And so I actually have to go to my prior employers and get like signatures saying that I can disclose my attributable track record. Wow. Now, oftentimes that just doesn't happen. And
there's nothing in it for them.
There's a bit of a challenge for me to go around and be like, all right, let me can I disclose all of the good stuff that I did with you guys? Yeah. And so there is track record. It's just it's tough. It's one of the challenges if you can't get that signature. So my immediate prior job I was able to get that permission. The ones prior to that I don't have. I was not able to get that signature.
So basically, like, can't talk about that track record at all.
Yeah, I mean, I go from basically nearly 2 decades to like less than 1.
Since you chose Malaysia and you're still there, I know you've kind of been branching out with more activity in other places. I see Thailand, Philippines, I think. But since you've been doing this since 21, how much has it gotten better from a Malaysia perspective to be a fund in Malaysia?
So that's a tough one. And I'll try and do this a little bit diplomatically because I have a reputation now of being a little controversial in Malaysia.
We're called the generalist, but diplomacy matters. We understand where we all live.
I just don't want to get deported is what it is, you know?
And I can create a diplomatic passport for you if you want. It's fine.
So it's challenging still. So like and it's not just necessarily specifically a Malaysia problem, but most nascent startup ecosystems suffer from a similar problem, which is the consistent creation of quality startups at volume. Mm-hmm. And that's a big issue because if you're going to be an investor, you need to be able to see enough deals year after year so that you can actually have time diversification of a portfolio. Malaysia has a tendency of going in waves. And so if you actually analyze some of the good startups that have come out of the ecosystem historically, you can kind of group them in similar cohorts in regards to the years that they came out of. Right now, we're in a lull where there's not a lot going on. But fortunately, when you're thinking about a region, while one is down, another one is up. So I'm actually spending more time in countries like Thailand and Philippines, primarily because it's how these different waves of the process kind of overlap between each other. Yeah. I do still sit strongly on the thesis that I have around why Malaysia should be a good ecosystem. They just need to kind of get out of their own way in order for that to happen.
Do you think that AI is assisting, like the development or the evolvement of AI actually assisting to this type of countries like Philippines or Thailand to think about new ventures?
So yes and no. So I would bucket it, and hopefully this doesn't come across as negative. But you're not necessarily going to see the next wave of the cutting edge of innovation coming out of those markets. Hopefully we do, but the probabilities don't necessarily support that because the deeper tech, the deeper research, it's generally concentrated around a few hubs, right? But what we are seeing is what you see in most places where people are getting significant amount of leverage out of the usage of these different tools. So the whole 10x developer becomes 100x, the whole aspect of when we're going to see the one person unicorn, all of these, they're a little bit sensationalized, but they definitely have nuggets of truth in there to where you're starting to see a uptick in how people are utilizing these in order to be able to put out MVPs, in order to be able to test the market, in order to just simply be able to do more with less. And then if you're talking about jurisdictions where they are capital constrained, the ability to do more with less is a significant advantage. It's still to be seen of how well they can actually leverage this, but I'm pretty optimistic in regards to that use case.
Yeah, and I feel like we see it just in the stuff we play around with, where some of these tools are wow, look what we can do now. It's
but still, I think it's based on my experience in my history. Yeah, you can have a nice mock-up, you can have a nice MVP, but you need to understand how enterprise are working.
Yeah.
How it's supposed to be scaled. Like to call it the enterprise readiness package. And this one cannot answer that.
Yeah, that's one of the biggest challenges across the B2B space, especially when you're talking about some of these markets, is there's an aspect of advantage when you're kind of an outsider and you look at things with a fresh lens. But the biggest challenge to adoption of any B2B tech is how is it fitting in with the workflows? And if you don't have some level of familiarity of how is it actually going to function, you may just be creating extra steps with your product and not actually creating solutions that have value. And that's one of the biggest challenges is it's the shiny object syndrome of I created this thing that can do so many stuff. But then when you actually try to understand how it's being implemented and used in the real world, you're just creating extra steps. Yeah. It's analogous to the pain of switching windows, and there's frictions, and we're trying to remove frictions and actually be able to do more with less. Coming back to that same phrase, and if you don't understand workflows, it's hard to actually implement. And that's getting aside from even the selling pathway of the go-to-market and what's the process for procurement, vendor registration. Invoicing is a problem in some of these markets on setting up recurring billings and these sort of things. There's a whole suite of problems, but problems are opportunities.
Yeah, and I think it'll be interesting to see over the next year or so just this new focus that you see happening around the B2B and AI all this thing, maybe birth a few interesting things coming out of Southeast Asia.
I hope so. I mean, we've got a handful of interesting companies in our portfolio currently, and as I'm sure every VC these days, almost every deck that comes across the desk has some form of AI, whether used as buzzwords, which is a pain, or whether or not used appropriately, and it's exciting. I think almost every pitch deck coming across has some form of it, so it's going to be an interesting time.
Pitch deck was probably even made.
It probably was made with a tool as well.
With Gamma?
Yeah. Probably. So you mentioned ever since your MBA, you've kind of been in the investment industry, I would say, but it's your first time running a fund.
My own fund. Yeah. So I've been in funds for quite a long time. So when I was doing the global role that I referenced two companies ago, we had 17 funds across 19 countries. I ran the global ones, and then I managed the managers on the other ones. And then the one immediately prior, it was a global fund, but I ran the regions underneath it.
So what did you learn from these places? Give us a nugget of this was an amazing thing I learned. It's institutionalized in my fund, and then the other side of it is, what did you learn not to do when you started running a fund? Because it's obviously hard to do your own thing.
Yeah. So the positive side of the things that I learned well is part of the advantage of going from later stage to earlier stage, because later stage is much more hands-on. Your intention is operating control. Oftentimes when you're dealing with later stage, that's kind of like the private equity playbook is you want to influence management. The thing that I learned of moving into the early stage is that I need to stay in my lane. That's the point of the founders. You're making the bet on the founders. Be useful, but don't be intrusive. And so that was a big lesson learned that I learned pretty quickly and very early on when I started moving earlier stage. But at the same token, I do strongly believe that when you think about early stage in nascent developing markets, and I've been working in emerging markets for a very long time now, is you don't have as many, fourth time, fifth time sort of entrepreneurs that have gone through the cycles. There's not as much institutionalized knowledge on how things are. So I think that there is a needs case for a more hands-on approach to where there's, every VC wants to claim that they're value additive. That's kind of table stakes that everyone's going to say. But I do think that there's certain aspects of necessity in living that promise, especially in more nascent markets where you don't have people that have gone through the cycles.
And how do you do that?
So that is easier said than done, obviously, because unless you're doing the ideation stage, there's not really a one-size-fits-all approach. And if anyone tries to do a one-size-fits-all approach, it's just not going to work. Yeah. Every company is different. Even if you're a fund that's heavily verticalized, every company is different. The go-to-market may be different. The value proposition may be different. The messaging may be different. There's very little that is common thread. It's like the reverse of a Pareto principle, where 80% is completely different and maybe a small fraction is the same. And so part of it is, when getting on board with a company, part of the assessment aspect of it is gauging what the working relationship with the founder is going to be. You don't want somebody that has like strong conviction and is like that force of personality that's going to make it happen. But you also want the person that is like, what's the saying? Convictions loosely held, where they're more amenable. If the facts change, they change their mind, sort of thing. Yeah. And so the biggest part of it is in that sort of assessment and in the onboarding stage of bringing the portfolio company on, of trying to figure out what is it that they specifically need and what can I actually deliver. Because I can't deliver on everything. I would love to say that I can introduce a customer to every single portfolio company, but I'm investing across the B2B space. I'm not focused on a single vertical. So I can hope on it, but I can't necessarily guarantee it, just because we have an investment in a company that's doing A/B testing tools. I can introduce them to customers, but they're doing more of a volume play in regards to the number of customers that they're going after. So if I introduce them to one customer, is that really life changing? Yeah. Whereas if I take somebody that has a higher contract value, yeah, maybe a $500K contract value is something that actually moves the needle for them in the early stage. But aside from that, a lot of it is just is a lot of kind of the maturation aspects of an organization, where we do a lot of like fractional CFO work to make sure that they're ready to get into the next stage, where the nobody should be hiring finance staff in the early stage. It just doesn't make any sense. But they should be metric competent and start developing that.
They need some financial rigor.
Yeah,
but maybe not the full-time employee to go along with it.
Exactly. So a lot of that is where I can step in and start helping them with that. We've done workshops around like how to define your ICP, redefining it. Done workshops with a couple of the portfolio companies in regards to refining and retooling their go-to-market strategy. So those three buckets are kind of like catch-alls in regards to where the most necessity is. But as far as the what underneath those, it all depends upon the company.
That makes sense.
Yeah. I think out loudly, and I think that some of the things that and correct me if I'm wrong, that any startup need early days moving on is this data room.
Yeah. Some people do it well, but most people do not. The funny thing is, and you would think that it'd be more common knowledge, but the challenge oftentimes is like, if I meet a company and I'm getting really interested and I say, okay, I'm interested, let's see your data room so I can go through all the nuts and bolts, right? And they don't have it ready yet. And then it's like a week or 2 weeks or 3 weeks, and they're compiling it at that point in
Scrambling.
time. I'm like, you're getting it very backwards, because what that's doing is that's sending a signal to me that you didn't do the preparation ahead of time and that you're not organized. And so like there's like these little nuances that everything sends a signal. And so things that are seemingly simple, like a data room, and even like the structure of what's in the data room or the organization of it, to me, that's a fairly simple thing from a company organization standard of like...
I imagine there's 492 YouTube videos that might even show you how to... I'm always flummoxed, but I'm like...
But it can be very simple. You don't need to go to...
Can you tell me something that's repeatable, that's known in the world that you can't find a YouTube video on?
No.
Anything?
No.
I mean, it's my search engine now to like... How do I do? Because a lot of times you can see and you can see the view and you can see if it's legit and, you know. So I'm always flummoxed when someone, well, maybe they're scrambling because they didn't get the work done, which I can understand.
Yeah.
Sometimes they'll ask you like how to do something or what is something. And you're like, I know you could have figured this out before you asked me. And then right away my signaling is they're not very...
Especially for entrepreneurs. I guess you believe that they want to have this curiosity.
Yeah. The flip side of that, however, I'll do the contrapoint to this is that like I get a little bit suspicious, and I don't know if it's like the used car salesman trigger or something like that. But you ever get the sentiment when something just looks too well prepared, too pretty? Like I had an instance where phenomenal data room. They had written their own memo. They were like, I mean, let's be honest, VCs are fairly lazy. So now that ChatGPT or something can write your memo, but like, if you flash back like 5 years,
5 things I should know. From this.
It used to be like a smart startup would write their own memo so that the analyst could just copy paste in order to do like the IC memo, right? And so sometimes when things are a little bit too well prepared, I get a little bit suspicious because it's like you had so much time to do this. It's one of those oddities where like it should be a benefit, but I'm kind of like, wait.
Yeah, because you wonder where the focus of their time is, right?
Yeah. Like, where's the flaw? This is seeming a little bit too perfect.
Have you built your data room yet?
Yes.
You have?
Yes.
You're so, see?
Yeah.
You're scaring him.
I'm scaring him. Like, I'm thinking about it. Maybe I'm going to scare him.
Is it well
intentionally make like one or two things just a little bit odd.
Mistake,
just to put a couple of blemishes in there.
Don't color code the folders of the drive, please.
Oops. I have to revert back. I'm going to go there.
I do the same because I have to have data rooms when I go out to market as well. And like simple things like consistent file naming protocols so that it's simple and all of that. File architecture. There's a number of, at least with the investors that I have, there's a number of them that don't like online platforms. So they'll actually download everything, have their secretary start printing documents out. So like the actual files internally have to have like labels on the pages and things like that. There's a lot of like little hidden things when you know your market.
Yeah. Sometimes, I'm building data room for my life, I think, like for my family, for my staff, everything is a data room. No? In the end of the day.
Could be.
Maybe I'm crazy.
Yeah.
That's another side.
But I want to go back to the investments.
Yeah.
On each investment, you say, why we invest. When it starts and why do you want to do that?
So I think it's a good practice. Like, so if I start going through the VCs that I admire, they're oftentimes much more open about how they make decisions, when they make errors, and that's kind of what I aspire to be like.
Like who?
So like, I love how Bessemer does their anti-portfolio. I like how Union Square is very clear about their thesis. Sometimes my San Francisco buddies give me flack that one of my favorite VCs is from New York, but it is what it is.
He's good.
They're quite good.
Nobody's perfect.
But that's one of the things that I like about it.
It's a strategy of Fred's too, right? Because you're well read of his stuff. Most of us are.
Yeah.
Like, I'm sure it's part of his net that he casts that, you know.
And it's great branding from him as well. He's nice because he's always stayed kind of cottage industry as well, not going too big on the AUM. But that's kind of the mentality that I want out there. And you know, it's not like I'm releasing the full memo or anything like that. So it's a little bit of a version made for public viewing, because otherwise, you know, the internal memo has a lot more private data, obviously,
and you're
as you
writing
would
an
expect.
internal memo on every deal?
Yeah, everyone.
Even ones that have not made it?
Even ones that have not made it, because I would just want to have documented in regards to why I said no, so that, you know, at some point when a couple of the ones that I've said no to are successful, I can imitate Bessemer and have an anti-portfolio. They said no to Apple
You enjoy
and
writing
Google.
them?
I think it's a good practice to write it because it forces the thought. The actual act of writing, I wouldn't necessarily say that I'm a fan of, but I think it's a necessary practice in order to extract the thought process.
I've heard of funds that don't do this, and some little ones, and I was always shocked because surprisingly, and it was one of those things that when we were at C Plus, you know, Jungle does them, so we would do them, and I realized right away, like, it's a process, but it really does make you. To me, it's no different than when at Amazon we had to write papers for everything we did. It's just this notion that the writing gets the thoughts out clearly, concisely, plus you can go and revisit this thing and see where you're wrong and right. Like, I think it's a nice tool. So I think it's cool that you also publish them. So.
Yeah. I mean, it's the same as like if I'm creating a forecast and I'm putting a hypothesis down in regards to what my conversion rate is going to end up being. I can look back and see the difference and say, why is it up or down? If I said no on a company and I look back at the memo and they ended up doing really well, I want to know, why did I say no, and do I still hold by my thought process in regards to what flaw I saw in it? And if one of the companies that I did say yes to end up failing, I also want to be able to look back at it and do a post-mortem as well.
And they may be going to come back, you know, in a year, and you want to look back and say, okay, why did I say no? And maybe no, I'm going to say yes.
Exactly. In general, among VCs, a no is not a forever term.
I don't think that lots of people think that way. They think if they got no, it's they cannot go back.
Yeah.
You don't agree with that?
I don't. It's just a not right now, because like it may end up being the tough thing is like, and I think a lot of founders don't realize just how many companies that an investor looks at. And so there's always this challenge where there's 1,000 reasons to say no. You're looking for the reasons to say yes. And so sometimes it's just a matter of messaging. Sometimes there's challenges in regards to the timing, because if you're inundated with news of some sort of scandal or an industry blew up or a major player in a space ended up going kapoof, you may end up kind of being a little bit off on that entire industry for the time being. Has nothing to do with the company, has nothing to do with the founder. It's things that are outside of their control. But 6 months later, maybe that news cycle, I mean, people, as much as we want to be cold, rational decision makers, humans are humans. And so there are influences that are...
And it's funny because I was a VC for a brief period of time. I've said no to probably more things than I would have said yes to, right? Because,
of course,
we only did like 20 deals, but we must have met hundreds.
Yeah.
So a guy had booked me for coffee that I knew in the network and it turns out he was associated with one of the startups that I had said no to. And one of the things I remembered is it was always uncomfortable. For some reason, I would have this like, I'm sorry, I got to say no, because I was like a new VC. But I also tried to like give some constructive feedback. I wanted to feel useful. And I also like, it's never about attacking the people, it's a problem, right? And it was really interesting because we met for coffee and he goes, you do remember me? And I like, and he was like, hey, I was involved in that. Oh yeah. And then once he said what it was, I definitely vividly recall. And I go, yeah, I know as one of the ones we said no to. And he goes, your feedback was great. He's like, and they ended up selling the company. And it was just kind of funny that like the no and the being constructive and having some empathy and being nice just led to another person that I know that, we reconnected just because of that. So I think there's, you can be decent in how you do this as well. And I know there's some people that are not, and kind of the reactions those creates, right?
Yeah, there is. I 100% agree with that. I think if you're going to say no, the challenge is a lot of VCs feel uncomfortable with saying no. A lot of people in general, no matter the circumstances, just feel uncomfortable about rejecting, right?
Yeah.
Conflict avoidance or whatever the case may end up being. But like, if you say no with a reason, sometimes you end up getting pushback, which is fine. Not everyone's going to always agree with your rationale, but sometimes it can actually be very useful to a founder. And if somebody doesn't say it, they have no basis upon which to like go back and reflect, change, iterate.
You may not be right or wrong. It's just
just a point in time.
A point of time and a point of view that might be useful to them.
I mean, this is the thing with the anti-portfolio that I referenced earlier. Like, super smart people say no to credible companies all the time. Like, you can't name one major company that will not tell a story of being rejected 100 times. It's just the nature of it.
It's part of the, I think I don't want to say the game, but it's part of the journey.
Yeah. Because everybody sees different things,
Correct.
Like I have a different perception on the direction of perhaps markets or where opportunities are than another person. Right. And so ecosystems need a variety of opinions. What I may say no to, another person may say yes to.
So speaking of the ecosystem, I lifted this one from the website. We're not putting you on the spot, but it just gives us something to talk about. Tech-enabled B2B startups that can scale internationally.
Yes.
We like this because like his whole industry that he comes from is
my whole journey is B2B.
Tech-enabled things that are sold globally because no one's buying them in Israel. Really, it's a small country.
US.
I won't say I've always said this about this, but I was always kind of wondering why it was such a B2C place and kind of why it wasn't more what you just said. So I'm wondering, when did you come to this? Was that the whole focus of the fund? Like you knew you're going to be that, and kind of, what's the report card on that?
Yeah,
because it's hard.
So I'll first start off with why I'm in the space, and then I'll tackle the question about the region. I just don't understand consumer. Like I'm not a great like intuitive peaceful person. Like I have the intellect, the emotional understanding of like Sheldon from Big Bang. If you have any clue of that pop culture reference, that's my ability to read people. So consumer, I'll consume, but I don't have the strong radar for what's going to be a consumer sensation. And consumer is very sort of hit driven. It's a winner take all. So you really need like a stronger pulse of all of that. And that's just not me. And my background, because of what I've done, I worked with very large companies, very operationally heavy into the role. So like I understand the ins and outs of a lot of industries, which lends itself very well to understanding the applicability of B2B. Now, okay, so that's the why me on the B2B. Now the region side of things and it being heavy on the B2C is, I think that is more of a function of the stage of development of the regional markets as a whole. Because if you look at the way that tech ecosystems have a tendency of developing, oftentimes and there's certainly exceptions to this, but the more common pathway is innovation and entrepreneurship has a tendency of starting with what's more familiar. And what's oftentimes more familiar is the consumer side of things, the social element, the e-commerce. Now that e-commerce is there, we need the fintech rails in order to enable it. These sort of like evolutionary building blocks that start building things out. And a lot of that is what Southeast Asia has historically centered around. And then if you go back into the middle of the 2010s, it was like the Indonesia boom. And this is large population market. So it made sense to go heavy consumer because now we've got this large single population. Little did they know that it's not really that way, but
numbers.
Lessons. Yeah, the numbers are the numbers, but the reality ended up being a little bit different.
You can see the reality now.
Yeah. I did like Lightspeed's report about like the changing of the paradigm. That was very
it was a good one.
Yeah, it was good. Lesson learned there. But I do think that we are at the juncture currently where we're going to start seeing a bit of the switch. So if you take and I'm gonna reference Eileen from Cowboy Ventures, the woman that coined the phrase unicorn. When she originally did that analysis, almost the entirety of the market value of those companies was consumer. It was mostly US. It was almost entirely consumer. You had your Facebooks, you had all of these sort of companies, right? She updated it, like it was a 20 year or something like that. It was just a year or two ago that she updated it, right? Almost did the complete flip, to where like previously it was 90% of the value was consumer. Now you look at the composition of the large tech companies in the US and it's almost entirely enterprise. And it's because we end up doing this flip to where the natural evolution, in order to be able to service all of that consumer, it has these ripple effects all throughout every other industry, because the supply chains that are now impacting all of that, they all need to end up advancing, becoming more efficient, more productive, more advanced. And I think we're starting to see a lot of that here. I do also believe that with the continuing shifting of supply chains, that in order for the region to maximize the opportunity, they're going to have to start adopting more technology to get those efficiency gains, because it takes too long to bring on new capacity online to fulfill that. So the short-term solution is to start becoming more technologically savvy.
Productivity. Yeah. Fair.
And that actually bringing one more thing, especially in the B2B space. And I think I mentioned to Michael just before we start that one of my first roles in enterprises was customer support. And I know you're a big fan of that. We saw some things that you wrote.
Yeah, that was my post of the morning.
Yeah, we have to look at the morning news, no? And share with us, why do you think it's so important, and why startups are doing a mistake not tapping over there and say this is something that we need to focus on, and when?
So I think there's two main aspects to that. One is very regional specific and one is more generic to anyone. And I think the generic to anyone aspect of it is that when customer support and customer service is done well, it can actually be a revenue generator because of a couple of aspects. One, retention. If you're just churning out customers because they're unhappy, that can have a seriously negative impact. Yeah. But happy customers are going to do one of two things. They're going to either tell their friends, which is you're going to start getting this referral flywheel, which is fantastic. You can get that K-factor viral loop. Or they start spending more money, so you can get deeper wallet share out of that individual customer. So you have opportunities for cross-sells and upsells. So when customer support and customer service is done well, happy customers create more revenue opportunities for a company. Now, the part of it that I think is more regionally specific is that because of the level of digitalization across this region, there's a discomfort with the lack of familiarity. So I do believe that across the region, there needs to be a strong sort of service plus tech, sort of complementary nature to the selling process where, and from the customer standpoint, it can feel like a service, but a lot of companies are starting to get better at figuring out ways to automate and get scale around this, which is there's a lot of frictions because of the level of digitalization in the onboarding process of new technology tools. Getting that solved is removing a big friction towards adoption, because nobody wants to the natural inclination of somebody that's running a family business that's like third generation, fourth generation, it's been doing it this way since grandpa, whatever. If it's not broke, why fix it, right? Yeah. Most of these family businesses across the region, they're cash flow positive. Everyone's quite well fed and happy. Well. There's not really any reason to change. And so if you do not remove these frictions and make it simple, the dynamics of the ROI of saying we can increase revenue or we can decrease your costs, all of this is going to be faced against that psychological barrier of, but I don't know how. So the service element can be a huge beneficial uplift for companies that are trying to tackle this space, especially outside of Singapore.
Yeah, and I had written about this, must have been 6 years ago for a presentation I did, and I bring it to even how to run a startup. And, you know, everyone that I've ever worked for or was early in the founding team, and I had learned this when I worked at WebLogic, was you're also, as a core team, delivering customer support, even if you're not in customer support, right? Like you have to. So like if there was a man the email thing, everybody's going to share that. If there was, you know, actual customer support people, a new employee, you're going to go do customer support for 2 weeks, right? Like it's a way to instill the culture of customer support into a new startup, which I think is good for culture building, but also brings everybody to the whole thing that if this flywheel works better, we're all better off. You'll have a lower cost of sales, you'll have a lower, you know, the whole thing is better. So I also think you can make employees get involved in this process, that it's not just customer support people, right?
I mean, think of the, I'm a little bit more of like a metrics and CFO sort of mentality. So like when I start thinking about, you said lowering customer acquisition cost. If you lower your customer acquisition cost, you lower your payback period, the amount of benefit that this does on your cash flow and your ability to recycle that money into more growth, it starts getting you so much operational leverage. And we all want to move fast. We don't really want to break things, but we all want to move really, really fast. And this is one of the areas to where we need to shift the mentality from cost center to revenue generator.
Yeah, I agree.
And I can share, I'm a huge advocate of that because this is the way I operated in 2 different startups. This is the reason they brought me, by the way, to these startups, to be the front end, to build this team, and that create revenue. Because... And you mentioned that retention is number 1, not just for happy customers, also for your next round. It's not just for your next round. It's also, I used to call it the lighthouse methodology. When they reflect other customers, and just going to speak about it on the next conference, or they're going to speak about it with their friends. They're going to be your ambassadors without having ambassador program. So it's worked. It's worked very well.
Promoter score.
Exactly. Well, think about one of the other metrics that if you're a SaaS company, every investor is going to look at your net revenue retention. And you take out the new customers that you're adding. The only way to get a positive number, happy customers spending more money.
Reduce churn, otherwise that number is not
reduce churn and have happy customers spending more money. Even if you reduce churn, you're capped at 1. If you're going to have one of those awesome metrics that's like 1.2, 1.4, where it's like you could be growing 20, 40% without acquiring a single new customer, that's what gets people super excited. And the only way you get that is happy customers.
One of the metrics that I like to present, by the way, to board of members is which customer is becoming a choke point. Meaning he was the one that was referencing, so he's another revenue generator without being part of the company, which was like a great, structure on the deck to show how many customers we got just from that customer being happy.
Those sort of referral nodes.
Yeah, I don't think people think about this enough. I think they think they'll get to it later, or I'll get to it when I have a customer service. It's
the first customer.
No, it should be in the founding team, and that's what I'm saying. And your first employee is the first guy on the desk, even if they're not. And that's how I think a better way of even building startups.
And that's part of the aspect of the maturation of companies and the founders is getting them to start thinking in those sort of terms. It's not going to come intuitive to a first-time founder because most times they may not be familiar with some of these aspects. And that's one of the layers when flashing back to what we were talking about, kind of like the value add role is along those sort of lines of just being able to kind of push some of those conversations. So, we with some of our companies, we're doing weekly, some with bi-weekly, some monthly, but oftentimes kind of pressing on a lot of these topics.
Super cool. So in the most diplomatic fashion possible, we went and made you the startup czar for ASEAN. While we were sitting at the table. Just like Trump, you're going to start with like your first day executive orders. What would they be? Like, what would you fix right away that...
I wish I could do an accent and do a voice impression right now, because you just opened up like so much comedic possibility. But unfortunately, I'm not up to that task. In regards to the region, like it's a tough one, because I don't think that there's a easy and feasible way to like really try and unify the region, because it's far too heterogeneous. It's far
what if
too
we said fix one country?
different.
And, you don't have to pick Malaysia either.
I mean, the one thing that I would say is that I think that there would be an interesting role of Singapore, which is basically financial capital, to be the leadership role of kind of the regional funds. There has been, if you've kind of flashed back over the last like decade and a half or so, when Singapore basically started the VC ecosystem in the region,
like 15 years.
Mm-hmm.
It was fairly regional in nature at that point in time, because most ecosystems were not producing enough volume. You couldn't really do a country specific fund. You had to have that sort of broader viewpoint. As it developed, that obviously changed. It became more compact. You had sort of your Indonesia only, you had your Singapore plus Indonesia sort of time periods, you had your Vietnam is the next China periods, you have there's a lot of sort of like buzzwordy sort of stuff. But I think it would be an interesting role to play in order to try and reignite some of this sort of like regional play. Because I do believe, and part of my thesis is that the pre-seed and seed is and ought to be heavily localized. As those companies graduate, that's when it can kind of consolidate back, because if you're going to raise 50 million, that capital is global, and because it's global, it needs global financial centers, and that's kind of the role here. But you know, if you're solving more localized problems and you're solving something that, you know, may not only be applicable in the Philippines, but Thailand, Indonesia, etc., you know, you should probably start next to your customers. And probably those customers can't necessarily afford a very high contract value. And so your cost structure should end up being relevant to that starting point. As things progress, obviously things could end up changing. But if I was to say my one wish list, I would love to see kind of somebody championing that sort of like regional push, and not really trying to do sort of like the siloing of country-specific funds.
The distribution, where you hire employees, it's all become...
Yeah, Malaysia's too small of a market.
Well, this is why I'm hoping... I talked to Jeremy as a sidebar about this. Jeremy Tinman. And I said, I'm really...
Love his LinkedIn, by the way.
Yeah, he's great.
He's a great guy.
I'm really interested to see if anything happens with this Johor Singapore Special Economic Zone from a startup perspective. Like, you know, and I've heard from people there is some discussions about it. Because think about... Yeah, that's not the whole region, but if you think about what it could do, where maybe lower cost of places to do stuff, but you have access, like that could be one model for some startup program coming out of the back of the special economic zone, right?
It'll be interesting to see. Call me a skeptic.
Yeah, nothing shipped yet. So
but like until actions start happening, because like, and again, I don't want to sound overly controversial or negative on Malaysia, but how many times have we seen MOU signing ceremonies and these sort of like publicity things, and then after that initial media is done, it's like, all right, job's done. Yeah, time to move on. And then a few years later, you're like, well, what happened with? You know,
which I think we're all in that camp that it's a possibility, but I feel like the concentration of activity between these two places just keeps getting bigger year after year. Yeah, and that isn't going to stop.
There's a huge opportunity. I mean, when you think of like data center space, that's a major one where like simply from a space and land advantage and water access as well, because you know that's where a lot of that advantage is there as well, and so. It just makes a lot of sense for cost of living. The proximity is so short as well.
I think we all know the flag's planted. We need to see if the reality that comes out.
I would love to see it. I would love to see it actually end up happening, because I think the logic of it makes 100% sense. Yeah. The aspect of turning that same zone into like a family office center doesn't make any sense to me. No. But the aspect of luring more enterprise, luring more development, getting more of a integration of the two ecosystems, whether it's industrial, startup, or otherwise, I think all of that makes 100% sense, and I'd love to see more of it.
Yeah, that's a good note.
There is good notion right now. This is what we feel. Maybe here in the podcast, maybe the people that we meet, that B2B startups globally coming from here, it's moving forward. How do you think you can get along more people to be in this streamline? Like just had previous talk with Lockify, with Honey. How do you can bring this type of motion to join the swim? Let's call it that way.
On the startup side or on the investor side?
You choose. You can choose.
On the investor side, I think it's already happening because people have now started to realize that the lure of the consumer side was incorporated too many myths that didn't end up panning out. It's still attractive. There's still plenty of room there. It just wasn't as much as initially sold as. So I think there's a decent amount of shift there. And investors are the type, like the moment you say, hey, money's over here, they're going to jump and start running over there and say, I've been over here the entire time.
What, me? I've already here.
Yeah. No, we don't do blockchain anymore. No, we're all in on AI. Oh, wait, crypto's up. Yeah, we're still on blockchain. On the startup side, this one is a little bit more tough because I think that there's two streams that we need to start populating more out of. One is the young talents coming out of university that have a little bit more familiarity with kind of the application of because again, that kind of comes back to the workflow standpoint of like, how does it actually like fit? It's one thing to think of an idea, but it's another to actually understand how it fits within the market. The other aspect is the more challenging. So I think going after university and getting young people, that's probably a relatively easy thing to start pushing at. The challenging is where, the largest pool of successful B2B founders generally come out of your sort of mid-career people that like actually have firsthand experience in the spaces that they're trying to solve for.
Second-time founders.
Or second-time founders or those sort of ones. So like getting a mid-career professional to like take the leap, that's probably the toughest one. Yeah. Getting a first-time entrepreneur, a successful first-time entrepreneur to do a second go, not too hard. It depends upon whether or not they love the chaos of those first days or whether or not they're scarred for life. Also depends upon whether or not they made FU money or they bought an island or they're just kicking heels up somewhere. Exactly.
Might not be the right timing. That's the struggle.
Yeah. So there's the challenge around getting that sort of like mid-career tier to either come back or take the leap. And so there's a number of like events and things that are trying to lure those professionals. But I think the biggest thing is we need to just we need to figure out ways in order to start more normalizing it within society, normalizing the fact that failure happens, but failure is not permanent. We need to start normalizing the aspect of success stories because there's not enough promoted success stories to where like, if you're a mid-career professional that's got this interesting idea, but you don't want to take the risk. If you've heard enough ideas of enough stories of somebody that kind of like hit it, and not necessarily meaning that you have to create a unicorn, but like you can scale up like a 5 mil, 10 mil revenue business, with a relatively small staff, make a nice living. There's a number of ways in order to kind of like, I don't want to call it lifestyle business, but nonetheless, like maybe not you don't necessarily need to build something massive, but we need more of those sort of people. So if we had more of those success stories, if we had more, I
kind of call them like base hits. Just there's nothing wrong with that.
Base hits and doubles, like there are a bunch of them, but we just don't know about them. Like they're not very present and visible. They're not in the news. I mean, part of it is because the entrepreneurs try and stay out of the news.
There's no benefit to them.
There's no benefit to them. They like being under wraps.
It's so different in Israel. The moment you get the money, you're all over the place, all over the magazines, Facebook, LinkedIn, TikTok. You're there. You just got the money. You don't have even revenue. You're already a success story because you got the money. So it's so different, depending your location.
It's not Asia.
That's probably why it's earned the title Startup Nation.
It's true. All right, obviously we could do this for a long time with you, but we got to keep to the time. So we're going to kind of rewind the clock back on you. It's a question we ask everybody. What would you tell your 20-year-old self now that maybe would help them in whatever they're going to do, knowing what you know now?
My 20-year-old self was not a good person, so I'd probably say slow down and don't treat your body like an amusement park. That's a little bit more joke than functional advice, but
more from a health perspective.
More from a sanity perspective. Of I never got injured, but there's probably certain times and things that I did that probably should have been the end. But no, as far as from a progression standpoint, I would have told myself to go out on my own sooner. I don't know whether or not I could have back then, but
as far as starting a fund or whatever you're doing,
exactly.
Stop working for others and do your own thing.
Yeah. I mean, when I was early in my career, it was already pretty obvious that I was the primary provider of all of the returns that the organizations that I was with generated. So it would have been wise for me to just kind of leverage that a little bit more early.
Got it.
And it probably would have been wise of me to force myself into the LP side and establish those relationships much earlier.
Because you would need those to raise a fund.
They take so long, man. You know, some people tell me that they want to watch you for 2 fund cycles. That's like 6 years.
Yeah.
You know, like that. Like
you're like, well, I hope I'm still around.
Yeah. Exactly. I mean, it's relationship building. So like when you start thinking about the denominations, it makes sense.
Yeah, we talked about this at team. It's very hard to prime the pump on a first fund. There's just no easy way of doing it. Right?
Yeah. You just kind of got to force it through. Yeah. I mean, we're not big players, so we're small and we're gonna stay small. So,
got it.
What do you do for your physical, mental health?
I do a lot of exercise actually. So I usually do either run or some form of cardio first thing when I wake up. Nothing crazy, 30 minutes or an hour, something along those sort of lines. If I'm traveling, then my routine is a little bit messed up. But if I'm at home, then pre-lunch exercise again, usually for another hour. That one's more weights and that. And I started getting very into paddle as well. I no longer play football or futsal or any of that because injuries, I don't like getting kicked in the ankles and all of this. And like the older I get, it seems the less coordinated everyone else gets. Or maybe it's me, I don't know.
It's just safer.
Yeah.
That's what I tell myself. It's just safer.
Yeah, and paddle is not something that's very injury prone, and it's quite fun.
Got it.
Cool.
And mental, I think just the exercise is the mental side of things. So I don't do any sort of like meditation routine or anything like that. I think
you're getting your dopamine. Don't worry.
To be honest with you, I like going on like running is very boring, but if I can actually like shut my brain off, the longer exercises and things like that, or just going on a long walk, the ability to shut off my brain is the meditation, and I kind of have to force it through some sort of physical strain.
Yeah, I'm the same way. It's like
same.
The gym feels like a sanctuary.
Yeah, I've started not going to commercial gyms anymore. So I've started just setting up my own home, nice. Or I'm in hotels a lot. So I've started getting, you kind of have to deal with what you can out of hotel gyms, which are generally not so fantastic. So I've gotten quite good at minimalism and still making it functional.
Yeah, that's good. That's a good challenge as well. Tell us anything you're reading, watching, listening to that you have found useful, even if it's just for fun or for your own gratification.
I have like a massive list of podcasts that I subscribe to be honest with you. So like that, I have like probably far too many. But I think one of the ones that's probably the most interesting that a lot of people may not know of is one called the Big Idea Club. And basically they do book reviews and have the author come and explain the book. So instead of me having to actually go out and read the entire thing, it's basically it's like the podcast version of like a Blinkist or something like that.
It's the memo. You're getting the memo.
Yeah, exactly. So that's one of my favorites that gets the most amount of my attention.
What I found too is when I find one of the ones I like, where I'm like, this is pretty interesting, I go search for that author's name in like just podcasts. They're doing a tour, right? And you can
And then you
find.
see
Well,
it's
no,
a
but
flywheel.
some are repetitive, unfortunately. But sometimes you'll find the right interviewer, who you know is a pretty good interviewer. And yeah, I basically got the book after 4 or 5, and I'm not trying to escape not buying it, but it's just more of like, I want it in my ears.
Yeah,
and
you,
like,
you
and
want
I
the
can
core
get the
ideas.
gist. And now some I've gone, I'm like, God, I got to get this book. I've heard so many good things. But
No, it's fine.
I can do that book audio tour via free podcast, and you get a pretty good handle on it.
And it gives you variety as well, because a lot of it is like the benefit of it is like curated by some serious authors, like the Big Idea Club. Like one of the curators is Malcolm Gladwell, and like I can't remember the other names.
They're not going to surface a crappy book.
They've got, and it's good variety as well. Things that are like, if I'm at a bookstore or if I'm shopping on Amazon or wherever I buy my books, I probably wouldn't think to look for it. So that's the nice thing that I find of it, is like it's forcing curation and a little bit of variety on me.
That's discovery. That's good. All right, Kevin, we know you got to catch planes, so thank you very much for doing this.
Thank you so much.
No, thank you guys. Thank you guys for having me. It was fun. I didn't stick to the script very much, but I think that hopefully is a good thing.
That's all good.
It's all good.
Yeah, and good luck with the fun.
Good luck with the fun.
Yeah. Thank you very much.